Hi traders, welcome to part 2 of how to maximize your winnings. In this small video, I want to share with you the second way that you should maximize your winning potential on every trade that you take. I talked about the first way, we're having an open target, and what I'm about to share with you is habitual for me, and that is you should be adding to your winners. If you are on the right side of order flow and the trade is playing out in your favor, in my view, adding to your winning trade, your winning positions, is the simplest way to dramatically increase your profit potential of any one trade. Think about it. If the market is proven your original analysis correct and is playing out the way you want it to, adding to your positions whilst the market is on your side is far more reliable than you taking a brand new position in the market where you don't really know whether you're going to be on the right side of order flow or not. If you have an open take profit target, and adding to your winners often results in the difference between a nice trade and a great trade. Now, of course, like everything in trading, there are rules around how you go about this. And the very first thing I would recommend is you never add another position until your first position is at least at break even. Otherwise, you're simply doubling your risk on the same market. You always only want to have your allocated 1R risk at any one time. The second part, of course, is knowing what you're looking for, your signal. That may be just a single candlestick signal. It may be a multiple candlestick signal. Either way, when the setup presents itself, you should re-enter. So now, you've got 2 stop loss placements on the same trade. Your first stop is hopefully at break even or in profit territory, and your new stop, which of course is at risk. Here's what you don't do, traders. You never have both stop losses at the same price point of the chart. Why? Well, simply, if the market turns around, it's taken both stop losses out. You always have them separated. So let's just say, assuming the market continues to play out in your favor, if your second stop loss turns out to be a losing trade, you've still got your first trade in the market, which could compensate for that. But if you've got them both in the same spot, well, then you're out of the market. So what you simply do is you've got your first stop loss, which is at break even. You've got your new stop loss. As the market continues to play out, you move your second stop loss to break even when the market gives you an opportunity to do so, and you move your first stop loss where your second stop loss was placed, and you just keep on managing the trade like that, having 2 separate stop loss placements so that you give yourself the highest probability of staying in the game and letting the trade play out in your favor. So again, guys, just a very short video, and I will actually do a video on how you manage your trades accordingly so you don't get stopped out too soon, you don't move them too soon, at the same time giving the trade maximum room to breathe, to reach its full potential. But in a nutshell, guys, I highly recommend that, number 1, you have an open take profit target. Don't limit your profit potential by having a hard target, and manage the trade accordingly. And number 2, as soon as the market gives you an opportunity, once you have moved your original stop loss at least to break even, then your next goal, in my view, should be on the lookout for another setup to re-enter that market. If you can do that, guys, I guarantee you it is an absolute game changer to your trading results. That's all for today, guys. Hope you enjoyed this very short video. Talk to you soon. Bye for now.